The opinions expressed on Two-Way Traffic are those of Darren Coleman and are for general information purposes only. It does not constitute any legally binding engagement between the podcasters and anyone else. Always check with your advisors to obtain your own tax or investment advice. Welcome to Two-Way Traffic with Darren Coleman of Portage Cross-Border Wealth Management. In this series, Darren aims to guide you through the complexities, complications, implications, and most importantly, the advantages of having money and family on both sides of the border. On this episode, lawyer and tax expert Trevor Parry is back with Darren, and once again, he doesn't pull any punches. Trevor says that tax is the single greatest threat to capital.
Hi, everyone. Welcome back to another edition of Two-Way Traffic, the cross-border podcast. I'm Darren Coleman, Senior Portfolio Manager with Raymond James in Oakville, Ontario. And joining me again today is my good friend, bon vivant and clearly sharp-dressed man, Trevor Parry. Welcome back, Trevor.
And I apologize for the sunshine that we finally got here in Ontario as it blinds you from my wonderfully polished head. So,
well, listen,
good to be back.
We had so much rain. I noticed you have a boat behind you. They almost called in the Navy to rescue everybody. We had quite the rainstorm in the Greater Toronto area the last couple of days. The Don Valley Parkway once again turned into a pond.
I always like that Darren, that they scream for more infrastructure money when they don't realize that in the last 25 years, they've covered every square inch of land with cement, and it creates a funnel. So this is what happens.
Don't bring science and logic into these political conversations, Trevor. It's just not going to work. It's not going to work. But glad to have you back. Our last podcast we did was very well received. And you talked about this idea of Leviathan. And I sent you a note the other day and said, we need another call right away because, again, we can see Leviathan lurking just below the surface.
Oh, I think it's crested.
It's crested. It's now porpoising like a dolphin. Okay.
Yeah.
So just to remind everybody, what is Leviathan?
Leviathan refers to two things. One, it's a biblical sea creature that devoured all. And then the more modern application of it is the 17th century masterwork by Thomas Hobbes, his utopian, or depending on your perspective, dystopian society, where the individual surrenders their individual security in exchange for freedom. And of course, that simply didn't work out. Leviathan devours all, including freedom, and protects very few.
Well, you are and have always been one of my best read friends. And it's interesting how you came across this idea, and yet people seem to keep repeating the same mistake of trusting in the monster. And so what kind of prompted us doing this call today was an article from the Financial Post by Kim Moody, who I know is a very good friend of yours. And
we have ongoing fashion wars.
I don't doubt it.
He believes in checks, and I'm the pinstripe guy.
Well, let the war continue then, my friend. I think it's all for the better. And so Kim wrote an article in the Financial Post, and people can go and look it up. It was written in July 9th edition, and it was based on an interview that Justin Trudeau did with a guy named Paul Kershaw, who's a UBC professor in British Columbia, and he's also the founder of an organization called Generation Squeeze, which, if you read their website, it says that they're championing generational fairness. Not entirely sure what that means, but that's what they're all about. You can Google their website and they will go on for many pages explaining what these things are. But the point of it was talking about housing affordability. And Kim Moody, who's a tax accountant, was, I would say, close to apoplectic about some of the information that came from the video and from the interview. And people can go and watch the interview. Just Google Trudeau and Generation Squeeze, and you'll find the 30-minute interview that Paul Kershaw had with our prime minister, talking about this idea of generational fairness and housing, and this idea of housing affordability. And what made Kim very upset, and when I think if the average person goes and watches it, they'll see Leviathan. And they were talking with different ideas around how to bring housing affordability back to Canadians. And they had things, for example, like they want housing prices to stall so earnings can catch up. I'm not sure between the two, you and I, who might have a little bit of economics and financial background, how one would make that work in a free market economy.
Well, infinitely more than Justin Trudeau, I can assure you.
Well, he said he doesn't worry about monetary policy, and I think we need to believe him. So I think the evidence is certainly there.
He worries about precious little.
They talked about driving down harmful demand which are things like, if people want to buy a second or third property that they want to use for investment purposes and rent it out, they don't think that's apparently a good idea. So that should apparently be disallowed in some way, shape, or form. They also want to protect home renters. Like rent. So I don't know how you decrease the stock of rental housing and protect renters' interest. I'm not quite sure how that works, but I'm sure it's explained somewhere on their website. And the one that I think was the most concerning to most people would be when they talk about increasing taxation on housing wealth windfalls, which, according to their website and information, means maybe providing a high annual tax on homes worth more than $1 million. So somehow you're supposed to just come up with the money because you've been able to.
I like how they find, Darren, windfalls all over the place. So there's now housing wealth windfalls. There's windfalls when you sell capital properties, including securities. None of these things are planned. They just drop upon the undeserving 1%, and of course need to be ravenously eaten by Mr. Trudeau, Herr Friedland, and or I guess she's Frau Friedland, and
Gender's a construct.
Feed Leviathan.
Gender's a construct. And then they also talked about, taxing the capital return on a home, for example. These are all things that have happened. So I was a little surprised. I think Kim Moody was quite disturbed that our prime minister would go and spend time with a group that has these ideas. And one thing I've been talking about for years is that with the amount of money governments have spent, I think we can all be guaranteed tremendous innovation in taxation. And so these are the kinds of things that are kind of in the breeze. Do you think Canadians ought to be paying attention to this, or is this just a sideshow? How legit do you think some of these concerns are to have?
Well, the Canadians have to become financially literate. We've talked about this. I know you're a great champion of that. And most are woefully unaware of basic economics, basic taxation. Too many of them eat the pablum that the government sells them, that there's this fortified 1% that sit there and eat caviar while they starve, they suffer through their existence.
Well, no, hang on. I think the specific example our finance minister gave us was that they're sitting behind their fences in gated communities with their airplanes or something. Is this
exactly?
I don't know who these people are, but this is my understanding.
I don't know. I mean, I traveled Canada for 12 years, 80 flights a year, and I don't know a single gated community. I guess there's some condos have some security measures and things like that, but I don't know what planet she's living on. I guess they have barbed wire at Davos, but who knows? It's preposterous. I mean, this is more of just the liberal silliness that has been exponentially getting worse. So those of us in the tax community, we thought the ship had sailed long ago on the potential capital gains increase. Every year we sat around waiting to see if this was going to happen, and we thought it was not going to happen in this budget because we know they're near the end of their time. And sure enough, it comes along. And it's part of the other lunatic ideas that have been percolating that come out of, some of these sort of ossified old brains of the bowels of the finance department. Not too many mainstream liberals believe in this. Surprisingly, I know I have liberal friends who are equally aghast at Justin Trudeau. They simply haven't said anything. They're starting to now. There's a little bit of you see a caucus revolt starting to form, but they've been talking about taxation of principal residence in caucus for years.
Have they? Okay.
They all know that it's really a political third rail. I mean, I think that they're counting on people simply tuning out, being undereducated or misinformed as to how things work. And also I think that this concept the millennials unfortunately find themselves in, where they're being told that home ownership is something that they will never happen. And once they're resigned to it, it'll be easy once again to stoke the fires of class warfare and say, oh gosh, your grandparents and parents have homes. Let's reenact Dr. Zhivago and ownership, or at least discourage it. It's not just modifying demand, which is what they focus on. They don't seem to understand that supply and enhancing supply is the answer to this. And you enhance supply by reducing regulation, reducing tax, and reducing cost. You'll get what you want, and probably ending the ludicrous immigration system that they've sort of foisted on us for the last few years and make it points-based and sensible. That'll ameliorate a lot of the problem. But they have these crazy ideas. And again, if you go simply read the Communist Manifesto, these people actually believe it. They believed the end of inheritances, the end of private property, except for them, of course. They live in gated communities. They would, I assume, have a good amount of their wealth not domiciled in Canada and in very safe places. So it's utter hypocrisy, as we have seen with virtually every day this government has been in power.
Well, it was interesting. One of the comments that our prime minister mentioned was he was talking about how, as seniors are getting older, and they want to basically stay in place. They don't want to move out of their communities. And he kind of lamented that, or it sounded like he would lamented that they're staying in these larger homes that they don't really need anymore. And boy, that's creating problems because younger families could move into there.
Mm-hmm.
I'm not sure what the next step in the conversation was going to be, but
exactly.
The fact that our prime minister is saying these things, I think we should be listening to this, right?
I know, and this is from a hypocrite, probably the most silver-spooned child man in the history of the country, who has never really held a job. He did at Point Grey Academy, and we really don't know why he left. But utterly detached from reality, and a good chunk of his cabinet's like that.
Right.
I mean, there are several of the Ontario MPs, I'm not going to mention names, but getting elected to Parliament was their first real job. They are utterly detached. Anybody with any gravitas or street cred was forced out long ago. You look at a guy like Mark Garneau, who, regardless of your politics, is a Canadian to admire, forced to leave cabinet. Bill Morneau, who I assume no one talks to him at the country club anymore, was a serious Bay Street guy and was humiliated by Trudeau and forced out. And there's a long line of them. What he is left with is really the student parliament. And they're in charge, and they are destroying this country in a visible fashion. I mean, I'm certainly a political person, but I talk to folks who, for the first time in their life, are animated, not just concerned, animated about what they have seen happen to this country, and it is directly attributable to the policy of the Liberal Party of Canada. It is intentional. It is not incompetence. They have said they were going to do this, and we can look at, other sources that inspire them, and they are executing according to plan.
So in terms of where do you think this goes? I mean, we've got an election that we have to have sometime in the next 18 months, right? If my math is correct. So,
and I think it'll be sooner than later.
Do you think so?
Yeah. I think that Jagmeet Singh is going to wake up one morning, the narcissist that he is, and realize he's tied his ship to the Titanic and it is going down. And there is a certain path of no return that he needs to cut the cord. And then he will miraculously stand in front of the cameras and save Canada. He will find some reason to abandon that pact that he has with Mr. Trudeau. And I think we'll have an election sooner than later.
And then away we go to the polls.
But you're going to see them float more ludicrous tax ideas along the way because they've lost the middle. They've lost the middle class. They've lost those who aspire to or do own homes are not going to support this government. So you'll see them float things like a wealth tax.
Yeah, and I want to touch on that because this is something that comes up quite often where people, they look at the United States, which has inheritance taxes. And maybe you and I can talk a bit about the difference between the tax system at death in Canada versus the United States. But Canada doesn't at the moment have a wealth tax, but we kind of do anyway. Just the name is a bit different, right? So maybe we can touch on that. So, because also this is where the higher capital gains inclusion rate, I think, is going to impact far more people than they talked about.
Yeah, we talked about that. It's not 0.14% of the population. It is a goodly chunk of Canadians who are directly in the gun sights of this monstrous tax change.
Yeah, and most of the families, I expect, will encounter this higher tax rate when someone in the family passes away. So when mom or dad pass away or grandma or grandpa pass away, and it's because we don't have a wealth tax, but we have a deemed disposition on death. So maybe you could just explain what that is.
Sure. So as you said, the Americans have an estate tax. You and I are both well versed in U.S. tax law, and there are ways to plan around it. You're still going to pay something, but the Americans have a far more pro-growth system. Problem with the estate tax is it's a political football, and whoever's in the White House will play with it. So we'll see where that goes. The Canadians decided not to have an estate tax, but rather what happens is absent a rollover to your spouse, you're deemed to have sold everything at fair market value the moment before death. And that gives rise to a capital gain, which now, with the new silly increase in the inclusion rate, personally creates a tax rate of about 34%. So that's everyone with a cottage. That's everyone with a portfolio. second property, and that's a good chunk of the population. Right. Now, those who are entrepreneurs or professionals who are incorporated, they have the double whammy, or what I always call the peril of double taxation, because a corporation is a legal entity and therefore survives its shareholders. In order to extract the value from that corporation, you need to wind it up, which is a share redemption, which at tax is treated as a dividend. Dividend tax, if you take a blended rate, is about 45%. Now, if you don't plan, which means if they don't pick up the phone and call you and you call me, what can happen is you get to pay both the capital gain and the dividend, which creates a potential tax rate in Ontario of 83% of your corporate worth. So if you're a doctor and you saved inside your corporation, and when you pass, let's just say you were lucky and there's $10 million in that professional corp, which would be high for most professional corps. If you don't do your planning, you could give $8.3 million to the government. So far worse than an inheritance or an estate tax. Now, what we do when we spend lots of time doing it is making sure not only do we make sure there's no double taxation, we reduce even further, and it's done prudently with, knowledge of the law. But we have a situation where, if left to your own devices, if you do not plan, the ramifications of dying in Canada from a tax perspective are much worse than in the United States. You also then look at brackets. Why is it so difficult to get a doctor in Nova Scotia or anywhere else for that matter? Well, they're lovely people. It's a beautiful province with 6 months of winter. But if you move to Florida and you and your spouse file as a joint married return, you do not hit the top tax rate of 37% until $685,000. Right. In Canada, in Nova Scotia, it's 54% at $245,000. Ontario's 53.5%. Newfoundland's 55%. Quebec's 53.2%. There's only 2 provinces where it's below 50%. And whatever people tell you that, healthcare is better in Canada, which is an absolute lie, you are demonstrably better off in the United States, which is upsetting to me because I love the country. Yeah. My mother's family came in 1608. I am as Canadian gets. But what I have seen this country become is beyond heartbreaking and beyond infuriating. I'm searching my Conrad Black lexicon for an appropriate word.
You may have to invent one. You're going to have to Leviathan into a verb somehow in your lexicon. You're gonna have to figure out a way to do that. But I think I'm really glad you gave that summary of because I don't think most Canadians are aware of just how much taxation can hit a family when somebody passes away. And this idea of a wealth tax or inheritance tax, Canada already taxes pretty extensively when people pass. And I think adding more to that, it will certainly guarantee that nobody's living in gated communities flying airplanes. That's for sure.
Oh no, if we have that. And the chance of passing on. I mean, just look at middle class wealth. Not the alternate, the high net worth, but we know how to structure them. Yep. They're not paying these types of situations. The average guy, the doctor, the dentist, the plumber.
That's right. The guy who owns the HVAC business down the street, the drywaller.
Financial advisor, right? Middle class.
Yeah.
You've got a normal life. You go on a vacation, maybe 2 a year. You get to send your kids to summer camps, that kind of stuff. Yes. Probably trying to recreate the childhood that we had. Yep. That is, as I said, directly in the gun sights. Trying to do that now, extremely difficult. And what's worse is that this government, and this is the first time, and I'm a political junkie, as you know, even Pierre Trudeau, who I think was an abject Marxist, even Pierre Trudeau did not stir up class warfare and promulgate policy on the basis of envy every day.
Yes.
They live in the world of identity politics and division on every line, whether it's race, gender, income, region. He is the most divisive prime minister in the history of this country, and he has a group of quislings and trained seals clapping behind him, and they are all equally guilty in this terrible endeavor of theirs.
Well, tell me how you really feel.
The red hats are over there.
Hats are so let's pivot a little bit to that because, this is a cross-border podcast and, we have, obviously this won't age well when I mention this, but we're right in the middle of the Republican National Convention that's happening this week. On the weekend, we just had an assassination attempt against the former President Trump. And just before that, we watched the debate performance of President Biden. We're hearing about Democratic Party members saying maybe we need to have him exit stage left and maybe get someone else in there. It looks to me like the U.S. president election is coming down to literally a game of survivor. I think the president is going to be whoever makes it to November at this rate. So what are your thoughts about what might happen as a result of what's been going on the last few days?
I always hold myself out as a historian. I mean, I read tax with a lot of coffee in the middle of the day. If you ask me what I'm reading most of the time, it's history. And there are a lot of parallels to various times. I mean, Joe Biden reminds me of James Buchanan and Weekend at Bernie's all wrapped into one. The parallel with the Democratic Party is 1968, where Lyndon Johnson knows he can't win, steps down. They have it's coincidentally the convention in Chicago, and with bloody constraint produce Hubert Humphrey and Richard Nixon, who I pull no punches. I regard as one of the best presidents in the history of the United States, wins a landslide, and then 1972 wins a bigger one. And Donald Trump, to some extent, his policies, I followed Nixon more than Reagan. I think that Trump will win this, barring shenanigans. And that he has the chance. And I think that Trump is uniquely placed as an outsider to be a unity candidate. He's not going to please everyone. It's like the George Costanza, the anti-George Costanza. Everyone doesn't have to like him. But if he says, okay, look, the radical fringe on both sides, I'm not going to appeal to them. But I am going to move the country back to where it traditionally is, which is a center-right country. I think he'll be tremendously successful.
Okay.
I think when you look at Canada, I think the key with Canada, assuming that Pierre Poilievre forms government, and I think he'll get a massive landslide, because, as I said, people who have never been political in their life are just viscerally angry at Trudeau. Soccer moms, they look at, safety. Look at our cities. I mean, I live technically in Hamilton. It's a zombie apocalypse. You're going to have a situation where you have the unique opportunity to bring the country not back hard right. We've never been a hard right country, but unlock energy, and our currency problem goes away. Start with the assistance of hopefully guys like Kim Moody. We get a tax act which is pro-growth, where I pound the table on things called patent boxes, where you're rewarding successful development of intellectual property, so industrial design and patents. We can unlock tremendous opportunity and create real results in Canada. This country should be the envy of the world. And I assure you, having traveled, we are not. If you're in Europe or in the United States, ask them what they see about Justin Trudeau on television. They're not getting the Pollyannish CBC Morning View. He is an incompetent leader with no capability and a narcissistic personality disorder that is absolutely textbook. So hopefully Canadians wise up to this. I think our problems are fixable.
Okay.
But as a tax guy, you have to come back to how do people make money and how do they keep it?
So let's talk about that for a minute, because you are one of Canada's leading tax experts. So if you were able to take a blank sheet of paper, you're the new finance minister or minister of taxation, or minister without portfolio, just general good guy fixing things. If you had to take your hammer and chisel, what would be some of the things that you think would help to make our tax policy more effective, fair, or whatever the right word is you wish to use? That would just make it better from your perspective as a tax expert.
There's certain things they're going to do. Carbon tax is done on day one. Okay. It makes no sense. It has no tangible effect on emissions in Canada, nor should we even try. Because as Poilievre has said, if we were to greenlight LNG projects and start shipping that to China and India, they'll actually see a tangible reduction in emissions. So that's what we should be focusing on. I favor a patent box, which is a low or no tax corporate tax regime on companies that successfully develop profitable intellectual property in Canada. It is directly a job creator. I would get rid of the top bracket, or which is the 53.3 in 53.53 in Ontario, that kind of thing. Or alternatively, what I would do is I would match the brackets in the United States that the top rates hit. So if we determine that you need a combined federal provincial rate of in excess of 50%, we should have joint returns, and you shouldn't hit it till almost $700,000.
Okay.
It should be extremely rare that people are paying tax like that. We've got to get rid of the tax on split income rules, the small business grind rules that punish people from saving money in their corporations. Because let's face it, though you and I know each other from my years of doing IPPs, there's only about 15,000 in the country.
That's it.
Doctors should have them, but they don't.
Right.
So should, everyone should have a pension, but they don't. So those entrepreneurs, those professionals who have the ability to save inside their corporation should not be deterred from doing so. We need to have joint filing. We need to have a pro-family, pro-growth tax system that rewards Canada and Canadians. It's not hard to do. It's simplification, and then we can get into all the the other minutia and plethora of rules regarding corporate reorganizations. Understand, if we had a pro-growth tax system, most of the tax planning community and accounting community will have to redeploy to find something new to do.
Well, I'm a big advocate personally of a flat tax system, which would actually get rid of most of the accounting and finance community in some degree, because how much did you make? Send in 17% of it and we're all done.
I'll have to go back to be a bouncer, but that's okay.
You can still do that. You stay in shape.
As long as I can go to bed by 10 o'clock, I'm fine.
I'm not sure what bars you'd be hanging out at, but we have an aging population, so maybe
the Blue Plate Special.
It's all going to go inside. Actually, it was funny. I was quickly. This is a silly story, but I was looking at something, and they had a price plan on it, and it was they had a special deal for 55 plus, which I realize is about to include me. So I had a bit of a moment there.
I've been there for a couple of years, and my wife reminds me of it because she's considerably younger, and she tells everyone that of this, just how old I truly am.
It was a bit of an emotional disturbance to go. Now I'm going to just adopt it, and everywhere I'm going to ask, because I'm going to start asking for seniors discounts. I think I just may as well, right? Just adopt it and just ask everyone.
I'm waiting to do my black belt test, and I'm sure it's going to be the geriatric nature. So
do you do it sitting down?
Yes.
Okay.
Yes, everything's done sitting down or in a pool.
In a pool. So as long as your belt matches your shoes, they give you something. Is that what it is?
That's
what I need.
Yeah.
That's fantastic. So I want to come back for a minute to this idea about housing being taxed and everything else. Do you really think this is something? I mean, they're clearly talking about it, romanticizing it. Are there changes that you think might happen between now and that next federal election where the Liberals may decide to just go all in on some of these ideas and just swing hard left, thinking we've lost the middle, we want to go more left, and they're going to bring these things actually to the table?
I think it's being driven by an electoral map. Oh. I think that they come up with these crazy verkacht ideas because they can hive off a little bit of a vote here or there. So they're looking at the deepest urban ridings and saying, well, maybe we can hold 20 ridings that we were otherwise not going to hold by coming up with, a new iteration of the Communist Manifesto and calling it something else, because that's what it is, right? But I think your rank and file liberal doesn't believe in this. I don't even think Trudeau does. He's proved anything. He's a hypocrite. But the ideologues in the party probably do. And then some of the spin doctors and statisticians say, well, maybe we can win a few Vancouver ridings if we can get the just enough millennials not to vote Conservative or stay home that day. So it's very much it's disingenuous. I don't think that they seriously are considering taxing the principal residents, but as I said, we didn't think they were going to increase the capital gains and inclusion rate in the last budget. Right. So I've been known to be wrong.
Well, I think at this point, all things are probably on the table, right? And not to be cynical, but it does seem to be politicians cozying up to interests that they may not have done a few years ago because they're all grasping at whatever they can do to somehow stay in power, or trying to set the table so that the group that has to come in and fix it, they can yell at them from the sidelines and say, well, look, you have to take all that back. You're going to charge more in taxes and everything else. And anyway, so I'm with you that there's things that we should be listening to what they're telling us. I also want to zero in on something you mentioned earlier around having a plan and preparing for this. And you talked about, that hypothetical person with $10 million. Most of the stuff that we're worried about, you don't have to have $20 million to plan for it. This is something that the average Canadian, of reasonable wealth is probably more on the hook for some of these things coming than they think about. So if you're talking to these people, what are some of the most important things you think they should be planning around, or the most important highlight items to check off, going, maybe get advice on this, or maybe talk about this, or have a plan for that?
Well, I mean, if you look at your average middle-class Canadian, they're probably going to have, $1 million to $1.2 million value on the principal residence. Their RSP, combined RSPs are probably 800 to $1 million, and maybe they have some other savings. So, net worth probably 2.5 to 3 million is the average middle-class Canadian. So if we're able to protect the sanctity of the principal residence deduction, then what's going to happen is your RRSP/RIF, most of the calculations that we do show that assume mortality, you're going to have you're going to lose 53% of it.
Right.
And that's going to be several $100,000. So that's something that can be fairly easily be planned for. And same with the principal, with non-principal residence real estate. So what we do, and I'm not here to sell life insurance, but life insurance is the easiest solution to at least the RIF problem. And really, it's just a quick calculation, and then do you qualify for it? It's permanent insurance, but it works.
Right.
And if you read between the lines of the Canadian Income Tax Act, we are the most pro-insurance jurisdiction in the G7. So insurance has a bad name, and unfortunately, it's deserved because of some of the, as I say, masters of financial alchemy that sell it. And for the most part, the level of knowledge that they possess is press hard, make 3 copies. But it is a solution that should be looked at, but it's got to be done in the context of planning.
Right.
Just buying a policy doesn't do anything. You have to. So when I write and I always apologize to the clients, and I say, listen, I'm a lawyer. I can't sign my name in less than 2 pages.
Why is it lawyers, they call everything they do a brief when it is nothing in common with it? It's not brief in any way, shape, or form.
To quote my mentor, Gordon Lang, bloody lawyers charge for every word. So, and it's true. We've fallen into that mindset. And I was recently a bencher of the Law Society of Ontario. Loved it. But lawyers are incapable of writing a brief email. Like, why? Here's 7 pages. I'm not going to read that. And I'm a verbose son of a bitch. No, like, brevity is wonderful. They should discover it. But you have a scenario where you have to do, as you guys do, everything is contextual. You have to have an objective view of what the financial battlefield looks like. So part of that is understand tax.
Yep.
Tax is the greatest threat to capital that you have in Canada. So what you need is smart guys like you and I, a good accountant who understands tax, who can prudently, and it's never simple, everyone wants it to be simple, who can make tax understandable. And then you design a very prudent battle plan, often which is simple, to make the tax go away.
Right.
When you increase your net worth, guess what? You're going to have more complex solutions. And when you're in the ultra high net worth bracket, guess what? There's your compliance costs are large, but you're there, you're already used to it. And there are solutions that are quite doable. I mean, that whole 83% potential tax rate on a corporate, someone who owns a corporation, the only time you run into that is negligence.
Right.
I mean, I routinely get people down to, I can do 0, but most of the cases that I deal with, we're routinely getting people down to a expected final tax bill of 15 to 17%. Right. We figured out how to beat the capital gains changes. I'm not going to tell the public, but we know how to do it.
Right.
So,
well, this is important because I think the trick to this is pay attention to what's going on and figure out a plan to make it better for your family. Because I think it's pretty clear you're going to have to look after yourself.
Exactly. Right. The government's not going to do it. They want to take it away from your family to give it to someone they've deemed to be more deserving.
Right. Which isn't the people with your DNA usually. Right.
No.
So we have to fight Leviathan. So Trevor, I'm going to stop it there. Thank you very much. I think maybe in another conversation, you mentioned this idea about financial alchemy. It might be fun for you and I to have a conversation about some of what that snake oil looks like a little bit in terms of what, I mean, I'm thinking about this infinite banking concept and a few other things that I'm seeing pop up on social media that are I just cringe every time these things pop up because they sound great, but they're horrible. So maybe you and I will take that.
I know.
Away.
In the pension world, we've seen, we're not going to get into it, but snake oil.
There's and I know which one you're talking about. So maybe we'll leave that one to our next conversation. But my friend, thank you very much for today. I appreciate your insights and commentary on what's going on. Disclaimer for my compliance people. Trevor said all that stuff. I was listening. So it's all good.
There you go.
And for those of you watching, thank you for your time and attention. And I think the key message is if any of this stuff affects you, take action. Reach out to myself. We can connect you with Trevor if it's the right idea. And we'll fight Leviathan together. So thank you, my friend. Have a lovely day.
Thanks so much.
Appreciate it. Thank you for watching.
This has been Two-Way Traffic with Darren Coleman of Portage Cross-Border Wealth Management. Thanks for watching and listening. If you have any questions or comments or ideas for new episodes, send us an email at twowaypodcast@gmail.com. And you can find the Two-Way Traffic podcast on Facebook and Twitter. This series is a production of the Acme Podcasting Company.
On behalf of the Two-Way Traffic Podcast and Portage Wealth of Raymond James, thank you for listening to this conversation. This podcast has been prepared by and expressed the opinions of Darren Coleman and his guests, and are not necessarily the opinions of Raymond James Ltd. Statistics, data, and other information presented are from sources Raymond James believes to be reliable, but their accuracy cannot be guaranteed. This podcast is for information purposes only and is not construed as an offer or solicitation for the sale or purchase of securities. Investors considering any investment should consult with their investment advisor to ensure that it is suitable for the investor's circumstances and risk tolerance before making any investment decision. Past performance is no guarantee of future results. Information provided in this podcast is general in nature and should not be construed as providing legal, accounting, and/or tax advice. Should viewers have any specific questions or issues in these areas, please consult your legal, tax, and/or accounting advisor. Raymond James Ltd. is a member of the Canadian Investor Protection Fund. Raymond James USA Ltd. is a member of FINRA and SIPC. Raymond James Ltd. and Raymond James USA Ltd. financial advisors may only transact businesses in provinces and/or states where they're registered.